The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple. Welcome to today's broadcast for Nadex, the current market analysis and identifying potential opportunities. Sorry that we got a little bit of a late start. We were trying to get something behind the scenes worked out, but everything is working now. So let's go ahead and jump into it on this. Wow, I cannot even believe it. I'm going to say it. November 24th. I feel like we were just talking about November 1st yesterday, and wow, this month is over basically. Next week when we're broadcasting, it will be December 1st. And the countdown starts to 2021. I know a lot of people are probably excited for that. So let's just dive right into things today. Like I said, it's if you guys attended yesterday morning's broadcast, if you guys didn't know, we're doing broadcasts every morning at 9 a.m. where we're breaking down kind of the hottest opportunities for the day, or what we see that as far as potential setups go. We talk about this week, being obviously a holiday week, Thanksgiving in 2 days, at the stage where everybody is thankful for everybody else. It's kind of a different type of trading week, right? It's a different environment. Lower volumes, we see spikes back and forth. In fact, if we'll look at it in a second, but we've had 2 days of really, what I would call a whipsaw morning inside of the indices, where we start off strong in one direction, and it's kind of that. I don't know if you guys have ever seen that meme where it's the little baby running down the hallway and makes like the big scared face and then stops and then turns around and runs back down the hallway. I feel like that's what we've seen this week with at least the indices and even some of the currency pairs out there. But again, it is a holiday week, so it will be a little bit different. So before we go into everything, let's go. I'll go over real fast who I am. If you guys don't know me and this is your first visit, welcome. I'm happy to have you guys. I'm glad that you're here. I hope you join us more often. I've been trading since about the 2000 time frame, kind of the tech bubble era, right? So I've seen up, down, left, right, sideways in the markets, a couple different elections, all kinds of craziness, housing bubbles. Learn the traditional way. So I'm not I always like to tell people this. I am not a 12th generation trader, right? I was not on the exchange of butter, which is actually a thing. You guys can look it up. No, I was, my dad used to work for IBM. He was a programmer. For me, I always had an attraction towards the market. I loved it. I used to try to absorb as much information as I could. I was just drawn to it. But I learned the traditional methods. I started with just the books. There was no such thing as the internet. I learned basically for, first couple of years, everything not to do in the markets. And again, it's one of the reasons why I'm driven to do this is to hopefully help someone else from making the same mistakes that I made learning. But I started with stock traditional options, found currencies about 6 years in, fell in love with it, learned how to trade futures, became a financial advisor, worked for one of the big 3 banks, learned the inside of the market. Actually got an opportunity to come. I didn't stay there long. It was nothing like I thought it was going to be. I didn't get to analyze people's accounts. I didn't make them, didn't get to make true decisions. Left that industry, went out to teach again, and I actually got to work on Wall Street. I used to stay, and I used to walk past the New York Stock Exchange every single morning on my way to work. It was kind of cool, getting to be in that environment, kind of see what it's like. I mean, right there at the front, right there at the front lines. Found Nadex, and for the last I guess 2-3 years now, I've been doing work with Nadex, as a partner of theirs. My passion is to teach people, and like I said, I want you guys to not make the same mistakes that I made and use the experience that I've gained over the last, I hate saying this, but over the last 20 years to make yourself better. So my goal in doing these presentations, if you don't already know, it's to give you guys some type of a golden nugget. I want you guys to get something out of today's presentation, or that make you look differently at something, or change the way that you're thinking, doing something differently, or maybe even education for the first time in the way to kind of trade the markets and make this something you do for a long time. So with that said, it's funny. I look at this picture. This picture is only about a year old. The girl's twice as big. Both the boys have hair down to kind of like the middle of their shoulders. They got they went with the COVID cut, and even my hair is long. My hair's not even that short anymore, and I got a beard. If you guys catch me in the morning broadcast, COVID beard. Everybody's got one, right? So that's where we are. Let's go through the Nadex risk disclaimer before we start with any charts or anything like that. But as you guys know, trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost at the end of the transaction, including fees. Now, the information presented within this presentation today is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, Nadex is a registered trademark of the IG Group, if you guys were unfamiliar with that. let's go through the agenda. And today will probably be a little bit of an abbreviated session. I don't want to go into full analysis with the kind of entire second half of the week being obviously a holiday where we're kind of stuffing our faces with, I don't know, at least in my family, people are not coming in, but, my mother is the one that cooks the turkeys. I still think we have a turkey that can feed like 8 or 9, and there's only going to be 3 of us there plus the baby. So I will be in a turkey coma probably for 2 days. But, what we're going to do is we're going to cover the rest of the upcoming news events for this week. There's not many, but tomorrow morning is actually kind of a hot button. There's quite a bit of news tomorrow morning. Then we're going to go over the indices, Forex, and commodities. And again, we'll match them to Nadex products. Let's pull in my kind of chosen website over here, right? So I use Forex Factory for a number of different reasons. Again, a lot of it has to do with the currency up top. I'm looking for these 24-hour pip changes to see how much movement we have. Really, besides kind of the Aussie position here, and a little bit of the yen. Not the yen, the pound. I guess there is some movement there, but again, a lot of that is more yen-based versus being actually the pound. For the most part, it's pretty quiet. I mean, dollar CAD makes some sense. That one had been rallying over the last couple of days. Aussie going straight up, which is actually in kind of almost a decoupling, right? Almost a decoupling of what we're seeing inside of gold, right? So that, again, we'll kind of talk about that as well. As far as news today, we had consumer confidence this morning. It's never great when consumer confidence goes down, but I will say, when you see statements like this, the Department of State certifies presidential election results in PA, that always kind of counteracts what we see inside of consumer confidence. But, and I say but, consumer confidence being bad before Black Friday and Cyber Monday, not really a good sign as well. So, that may, and I say may, I don't have a crystal ball, it may actually reduce the sales that we see this weekend. Now, I do think there's many positives that will come, great headlines. I think we will hear about record purchases this year, but I mean, those record purchases this year are going to be at the expense of basically the retail store, right? I mean, malls will shut down, everything else. So, I mean, there's not really many places that you can go just shopping and peruse around with anymore, right? People are not going to be camping out to go get these doorbuster sales, right? A lot of that stuff is all going to be moved online at this point with, all the restrictions and everything we else have going on. So, yeah. So, I mean, there'll be some positive. This is the most we've ever seen at Amazon. Yeah, sure. Right. I mean, it makes sense. I mean, the whole year's been like that. And then we'll see, the kind of the death of the retail storefront is what I think we're going to see. So, but as far as tomorrow goes, I mentioned tomorrow's a hot day. Yeah, I mean, Wednesday before the holiday, I know some people are going to want to bolt early, get out, but that means that we could have some fast and furious trading tomorrow morning, starting with the European Open. Okay. European Open being around that 3 o'clock in the morning, 3 to 4 o'clock a.m. Eastern time. We have an ECB financial stability review. Now, I don't expect the results to be bad, but whenever they mention anything about the recovering environment or what the true impact of COVID is going to be on the European Union, that can really send this currency pair here just moving, right? And then we have it followed up by the preliminary GDP figures. Now, this is an interesting figure, GDP. Again, previously we were up 31.1%. The forecast is another 31.1%. And you're seeing this like, wow, that's a monstrous number. And it's because we had such a big collapse before, right, with COVID. The question is, are we going to be able to maintain this, and when is this going to roll back down again? Again, we're going into lockdowns. Kind of, it looks like a second round. I saw, a news article this morning about how LA County is actually getting ready to shut down, I guess, outdoor dining as well to try to get ahead of this. And again, every state is doing things a little bit differently, but that number will turn negative at some point here. And again, question is, what will the negative look like? Because you guys know how that the percentage game works, right? If we drop 50 and then go up 50, we're not back up to the same spot. So yeah, we're not quite there yet. And again, this is talking about what the recovery is going to look like. Is it going to be a V? Is it going to be like an L? Is it going to be a figure eight? I mean, there's all these different patterns. There's V's, W's, L's, M's, N's, and a couple other kind of crazy ones out there. So you got to watch out for that. Now, unemployment claims is another one that I have my eye on tomorrow morning. This one has been interesting, and again, we can look at the history real fast of this. You can see that the forecasts, obviously, they're not right too often. But last time they had forecast of only coming in at 700,000, and new unemployment came in at 742. I know since that time, many other states have started to close down again. I know at least since that time, Maryland in general has closed all bars and restaurants at 10 p.m. I guess they said that, once people get a few drinks in them, they don't make, they're not holding to the guidelines as well. I'm like, I'm pretty sure a few drinks, no matter what time of day, people aren't following the rules as much. But yeah, so again, that's just just an example here. I wouldn't be surprised if this number actually creeps up. They have it lower than last time. Wouldn't be surprised if this thing starts creeping higher and higher. Maybe I'm wrong, and I hope I'm wrong going into Thanksgiving week. But I just have a lot of concerns about this one, and I feel like this may dominate the indices tomorrow because, again, not a lot of other data. Now, we do have revised consumer sentiment is one thing. We have some autumn forecast statements, not a big deal. And then FOMC, like, I always think this is strange. Like, I mean, think about it, right? You have a 9-to-5 job. You pretty much want to get out at noon the day before Thanksgiving, right? There's travel. Not that people are traveling this year. You got to get home. You got to do your last shopping. And then, bam, we're hit with a 2 p.m. FOMC meeting notes. Imagine what the volume is going to be like tomorrow afternoon, right? It's not going to nearly be as high because, again, a lot of people are doing all these other things to prepare for the holiday. People are done. They're out, right? It definitely could be a firework for some crazy movement. So, again, just keep that on your radar. Make sure your positions are protected. Make sure you know where your stop losses and things like that are. And then tomorrow night late, we have the private capital expenditure in Australia. Now, if you've never traded Australia data, it's really a great thing to trade at night. Private capital expenditure, it tends not to be like the biggest mover. But, again, it may provide some opportunity because there's going to be no U.S. kind of counterbalance to this one whatsoever. Now, going into Turkey Day, you can see we have absolutely nothing. I don't even think we have anything, on the low. Yeah, we got a couple things, but none of them are really big. I mean, monetary policy meeting accounts, kind of. CPI in Tokyo, a little bit, but not too much there. Going into Friday morning, you can see nothing that's considered huge, but there is some French GDP numbers. Again, that will help move the euro if you guys are going to trade on Friday. So, for the most part, tomorrow morning is really the last hotbed that we have here. Whoops, I don't need all that on there. To show you guys here. That's really tomorrow. That's it. This is the big day tomorrow morning. So again, you want to make sure you're watching it. Now, what's going to move the market to the rest of the week? Obviously, that's important. Again, any news site you can use Forex Factor. Use this news section here. You can use Daily FX is another one that it does a great job of presenting kind of what the most current news is. Again, kind of keep track of this. I mean, getting these things about election boards and everything is always great to hear. Again, hopefully over this holiday break, we see COVID numbers go down. I know today was the first day in Maryland that we finally broke back under 2,000 in the last 5 or 6 days. So numbers went in the right direction today. Let's hope that tomorrow and Friday and Saturday continue in that direction because, again, that could also provide some trading opportunity in a positive note, right, in a positive way inside of the markets, okay? So with that said, let's go over and pull up some of the charts. So here's what we have with the NQ. And I mentioned MQ this morning. NQ this morning is kind of what I mentioned, that is a probable, setup that we're looking for, right? And we were sitting back in here earlier this morning, and NQ is one of those ones that 2 days in a row. I mean, here's what we had yesterday, right? Here's the news that popped us up, the PMI number, and then boom, right back down again, and then we're back here for this morning, right? We're basically in the same spot, but a spike up, a whipsaw down, and then a spike up again. Well, today you can see we have the exact opposite pattern. What do? We spiked down first, and then we said just kidding and went right back up again. So again, you're seeing these spikes, and it's a very common pattern because people say, hey, listen, we've broke out of the kind of overnight Globex session. Let's go. It's going up. Just kidding. Boom. Stopped out. Vice versa. Oh, we're going down negative, negative, negative. Yeah, baby. And then boom, it goes right back up again. So it's a very common pattern, particularly when there's low volume. Now, where we are now, again, certifying the election is great, but again, I think most of the news is based off of tomorrow. As you guys can see, I have kind of levels here that I'm looking for. I mean, again, sellers have been here before. I mean, it's punched up. Sellers have pushed it down, kind of got front running here. Didn't make it here, kind of went up, and now we're basing. I mean, obviously, it's Tuesday afternoon. There's not a whole lot, but again, we're going into the end of day. Again, or the rally or collapse. We'll see which one. Right now, it looks like it's more set up for a collapse, but, it doesn't, we could get some more positive results. Again, could be a number of different things that could help drive us further, right? Going in, and again, the market, I'm sure, would love for us to kind of end up on a big green tomorrow going into Thanksgiving. Again, the market does like feel-good stories, and traders do like feel-good stories, so I wouldn't necessarily be surprised if we do punch. But on a technical basis, looking just at the chart, As you guys know, this is what I call, again, the curve. I'll come up with a fancier name for it, right? But right now, we are kind of high, and again, curve because it's shaped kind of like the bell curve, right? Right now, we are kind of in the upper section, right? We're at the extreme. We're at a level where sellers have stepped in. You guys know me. I'm thinking, hey, I'm leaning more towards the bearish side, right? I'm kind of hunching up on those back legs, getting ready to swipe down. Is kind of, again, if you guys didn't know the story with the bull and the bear, that's why it's called that, because again, it rears up on its hind legs and then pats down, right? I'm kind of looking for that again, a level we talked about. Now, it is more or less channeling. You can see over the last, 3-4 days, it's been channeling. I will warn you guys, after tomorrow, and depending on what trend it takes, again, that's probably the direction it will take for the rest of the week, unless there's something absolutely blockbuster coming on in the markets. I'll give you guys a number on this one. This is approximately up here around this 12,000 mark. We're at what? My number's a little bit off of yours because it's ECN-based data, not coming directly from the exchange, but we're right around that 12,000 mark right now. So big psychological level. It will always get sucked into those levels when you see a whole bunch of zeros. But again, if we start running out of buyers right now, and again, a large emotional push up, this is definitely something you need to watch and kind of roll over. Could potentially roll over into the afternoon. Okay. Now S&P is driving. Now it had a couple small levels in here. We talked about it, and you can see it pop back here and kind of pop back over here. Actually, I thought I changed these already. See, I'll just take these off real quick. But you can see, in this one, this is an intraday. We'll take that off. We'll take this one off. Over here on the left, you can see this pink square in the middle, and it shouldn't really be pink. It should be a different color, but it's okay. This is what we're using for our larger time frame curve. Now, we are high in the curve. We're looking for pullbacks, kind of the same thinking, emotional push up. It's not really at kind of a, what I would say is an earth-shattering level right now, right? If we go back, you guys can see this dark line. You can see that price has been up here before and kind of got turned around. It'd been a little bit higher, kind of turned around. So there's numerous places here where we could see price turned around, but I'm kind of looking a little bit higher. I think up here at this 36.57, if we can punch back up there, that would give us, I'll just put this up here so it makes a little more sense. Kind of up in that level. That would be at the extreme of the curve, kind of up near those the extreme highs, right? Again, if it's an emotional push up, that could give us the rollover. The problem with this one, again, and if the NQ starts to roll and flip, the S&P will probably follow. But if it is able to come up higher, again, I would like this for kind of a rollover short. I don't think anything happening right now with the coronavirus, with anything else you see out there is going to be great. I think the only true economic factor that helps us here is if we're able to be this high up in the market anyway, and then we get news of that stimulus, right? I do think stimulus is coming. If you guys saw this morning, 125 economists said we need additional stimulus and send it into the Fed, or send it to the government, I guess. When that many people say, hey, listen, you need to get this done, they'll probably get it done. If we are high and all of a sudden people are getting a whole bunch of checks, trust me, the market will rally again. And think about it. If you got a check in the spring and you're getting another $1,200, yeah, you use it to pay bills, but Christmas is coming up, right? Holiday season's coming up. The season of giving, right? Season of giving, gifts, right? So again, that will help stimulate us a bit higher as well. But I think there's a potential rollover there. Look at the Dow. Dow is kind of in a similar situation, but you can see we are punching up here. There's nothing. I mean, I can go back to a weekly, and you can see we are all the way up, right? We are all the way high at this point. So right now, what can you do with this? The answer is really not much, right? Is there going to be a time where we base and rock back? And the answer is absolutely yes, right? So let me move a couple of these things here. This was a channel that we played a couple different times. It's fine. Whoops. I don't know if I want all that gone. Yeah, it's fine. Right now, what we're looking for is some type of a top. Now, where it is, I don't know. Am I willing to just take a blind short saying, hey, listen, it's way up, let's just short it? No, absolutely not. We need some type of a confirmation on the chart. And right now, we have some decent candles. Would I say that there's going to be a short today? I don't know. I mean, I have to see what happens with this one. But I like the fact that this has rallied, it pushed. I mean, you can see that it actually grabbed some orders right here and ended up punching higher, right? It came up, it pulled back, it based, it punched, and it tested, and then boom, gave us an entry and went higher. So any type of a short position, the first kind of profit target to the downside would have to be approximately around 29,842. This may be it. If we get a little bit of a pushback, again, maybe it comes back into this range. Again, what that would do is that would give me, oops, not that one. And again, this is just hypothetically speaking. If we base and start to push lower, that could be a pattern that looks something like this, right? And again, profit targets to be somewhere over there. Again, I don't know what it's going to look like. I got to see what it does. Again, it's kind of one of those wait and see attitude looking kind of situations. And again, if we base around here and push up, bad news tomorrow could definitely turn this thing and roll it down. Again, seeing some of these totals, seeing some more quotes, and again, with a lack of economic news, the media is going to take over, and that's where again, what fastens eyes to, the TV, right? Is it happy? Is it happy stuff or negative stuff? It tends to be negative, which again could also lead us to kind of roll over to the downside. So again, this could be the basing point. It may not be. Again, it may just base here. The next candle could be green, and again, that's not a place where we want to get entered. But what you're looking for is a pattern like this, right? This is what I'm looking for right here, right? I'm looking for a base, and again, if this is this, I'm looking for a pull down, a base, a pull back up to confirm, and then a collapse. And you can see the same exact pattern help worked here. Okay, so that's what I'm looking for. Something along those lines. I don't know if it's going to be here. I don't know if it's going to be much higher, but it's something that you can definitely keep on your radar as far as the indices go. Now let's switch across to currencies because there's a few different things I want to discuss there. Now, here's a level that we talked about earlier in the week, and you can see. I mean, it's bounced here, and here, and finally, it broke through. Now remember, this type of trading zones do not last forever, right? Eventually, there's sellers in here, and price got up, and sellers said, "Yep, I'm selling," and it came up again. Yep, again, but eventually, sellers run out. Now, we do have an area sitting right above it, 73.81. Got a little bit of room to run on that one. Again, this is a 4-hour chart, so we're talking about, I don't know, about 35 pips. The reason I'm bringing this up on this higher level chart here is this. Okay, well, I guess I'll do it on the daily. On the daily, this has a daily ATR of 67 pips. Okay, on the 4-hour, where we are right now, you can see that we have levels sitting right above, both on the 4-hour basis, which is a little bit higher. It's about 45 pips away. Okay, it has a 67 pip daily ATR, meaning that is the average move that it will move in one day. We are less than one ATR from that area. We've had this thing rallying up in a strong bit of movement going higher. Again, could lead us to a rollover push to the downside. Now, a lot of people say, well, the U.S. market's closed. I mean, for that to roll over, that would be dollar strength. We're not open. We can't project dollar strength. You're absolutely correct. With banks open, the United States can do really nothing that says, hey, listen, we're going to strengthen the dollar. Because we're not open. We're eating turkey, right? We're getting big. We're putting our swell weight on, right? But can other nations in the world prop up the dollar and weaken their own currencies? And the answer is absolutely yes. And it happens a lot. Okay. When the United States cannot defend itself, all other countries in the world can make the dollar more expensive, which makes them puts them in a better opportunity for businesses to purchase from their country, making their exports higher. So on a fundamental basis, this absolutely makes a lot of sense. Okay. And again, a rally up high into the extreme range of the curve, great place to roll over and push back to the downside. And again, we are within one daily ATR. So again, that Australian news at night now all of a sudden starts to matter more. Now looking at the Aussie yen, same thing. We had some projections here coming off of this zone, and again, you can see it popped, it rolled back, and has gone higher. We're in the same situation here. Again, we're starting to get into the upper reaches of the curve. We have a level that's coming up right up at the top. We're kind of sitting inside a 4-hour right now. Again, it's a big 4-hour zone, so it's not my favorite of levels. I kind of want to use the zone that it came off of, right? But this zone right here, this 4-hour supply, is what we are hitting. It's matching up the same way that the Aussie dollar is. So kind of the same thinking, looking for a base, looking for some type of a rollover here. Don't have it yet, but we do have a zone that comes in just a bit higher. It's only about 15, 20 pips higher, so it's something that could be triggered today based off the movement in the yen. I see a hand for it. Let me see. I don't know if it's a question. I always forget what that is. You know what? Let me pull this off. If you guys have questions, somebody put up a hand and I don't see what it is anymore. If you had a question, just go ahead and type it in the questions box and I'll see it pop up. So looking for the rollover, that one. So euro yen, kind of in the same situation. I'm going to go back a little bit farther. You can see the euro yen. Again, we've had a lot of movement here, right? Go down to the hourly and let me mark this one off. And again, I'm doing this one for you guys. I hope you guys know why I do this one. But here is the open, and then there is to 8 o'clock, right there. Right there. Okay. If you guys didn't know, these blue boxes are showing us the move off of the open. UK Open, European session. Okay, I want you guys to see what these kind of moves look like. Actually, this one's a little bit off. 8 is down here. Should be there. There we go. Same kind of thinking on this one. Again, on a 4-hour basis, we have just left the middle of that area. Again, we went down, we kind of based for a while, and now we're pushing higher. We're looking for areas to get short. There's a couple small ones in here. I don't really love too much in this one. Like I said, most of this one right now is being driven by the yen, not necessarily the euro. Again, the European Union is obviously in kind of a debate with the UK. They've had to take the Brexit discussions fully online. There was 2 EU negotiators that got COVID-19, so they had to kind of shut down that in-person negotiations. It's much easier to puff your chest out and be strong over the internet than it is in person. So I don't think a lot's going to get done until those guys are actually back face-to-face, if they are actually going to come back at this point. We'll see if they go back to the face-to-face negotiations. I think they need to get Brexit done. So kind of the same thinking. We're in that high curve area looking for some place to get short. I don't really see too much driving. Again, the EU is also closing down, and again, any type of monetary policy there will help drive us in the direction. But right now, I do believe that all focus is going to be on that U.S. retail, and again, which is going to drive the yen. Would I take a short up here? It's all right. I mean, maybe. I mean, if we can get up there by like the European Open, we're sitting up here around 124.42. That could be an area where I'd be willing to take a short. And again, impulse correction, right? If we impulse a little bit further, but it's like it gets a little bit weak, taking it from being high in the curve back into the middle, not necessarily a bad idea. But again, euro yen right now is not necessarily one of my favorite positions. Pound yen is driving. Okay, and this is a 30-minute. I can drop it to an hour. You can see strong movement, and there's a lot of kickback in this one. You can see that it bounced right off of this enormous 4-hour zone. Not a trade that I was willing to take. Unfortunately, the risk on this one was 59 pips. I'm typically not interested in taking a 69 or 59 pip stop loss, particularly in this pair. But again, what am I thinking? Yes, high in the curve. Strong movement up, looking for kind of a retrace back down a bit lower on that one. So, bearish thinking, don't necessarily have an entry. We do have this smaller zone here, and again, I'll extend this across just the top so you guys can see it. But that is coming in at approximately 140.12. If we can get up there by tomorrow morning for the UK Open, it would be another area that I'd be definitely interested in giving it a second, third, and maybe fourth look for a bit of a rollover. Now, some of you may be wondering, with Thanksgiving, how do we take advantage of some of these currencies? I'd love to trade, but I'm not really familiar with, I don't do it a whole lot. Well, a couple easy ways, right? Again, the currency market does not close. It basically runs, technically the spot currency market is open Sunday night and closes Friday night. You're open, basically 6 days a week, right? 5.5 days a week. With that being said, is there going to be as much movement over the holiday? No, but I do expect that there will be some movement with the pound yen. The problem with the pound right now is the pound is waiting for Brexit. Okay, this time next week, we're in December. That is when the hard exit is officially here, if there is no agreement. I'm expecting that we will hear some type of new agreement. I think at this point, all businesses are prepared for a hard exit, but I still think that they will get something done. I think there is still time. I don't think anybody actually wants a hard one. Maybe Boris. Maybe Boris is the only one. So that's just me. Both fall. Yeah, Manny, I'm kind of feeling that way. Yeah, they're both in an area where I would not be surprised if they have those pullbacks. Right? Again, they're high on the curve. High on the curve for me means that I should be looking for shorts. Okay. Now, pound dollar. Pound dollar, you can see, is not the rocket ship that the other pairs are. This one on the 30-minute, again, it's had the pop. It had some good data out of the UK. But besides that, it's still kind of stuck, right? When I say stuck, we're in this upper area, but both times that it has fallen and kind of gotten into this bottom area here. Here, I'll go to the 4-hour. You can see both times when we've pushed back down into this middle range, what's happened? It pushed us higher, right? So it wants to stay high. I would say the same thing. The only word of caution that I use for this one is I do believe when, and like I said, this is my opinion. I don't have inside information. I am not in the inner workings of the EU and UK trade discussion talks, but I do feel that when we do get that data, because I do think it is coming, I think that would be a huge boom, because right now I think that the markets are nervous that one is not going to get done. I don't think the markets believe it's definitely a hard exit, but I think they are kind of prepared in the middle saying, listen, we don't really know. I feel like once we get that confirmation that, hey, listen, we have come to an agreement of terms for, a trade deal post-Brexit, I think that that will be a huge catalyst for the pound. So while this is also in the top third of the curve, I am a little bit riskier in this one going short. Now, the pound yen is also playing in the yen world, okay? The pound dollar, I feel, will just be crazy. I just feel that this one will just skyrocket once we get that confirmation through. So it is one that I'm a bit more cautious with. And again, make sure that you understand what contracts you're in. But again, if we do get higher, there is definitely areas where I'd be willing to kind of get, look at this one to look for short positions. I don't think it's going to happen this week. I think we will kind of flatline. These are probably more for early next week. But I will tell you, Saturday, if they come to an agreement, man, watch the gaps on Sunday in this pair, okay? Now, euro pound. Euro pound is also kind of in an interesting spot, right? We've bounced. This is an area that we talked about yesterday. We talked about it last week as well, this 88.76 area. It was the last area where we had true buying coming in, right? Drop, base, and then boom, pop, base, and then higher. And again, what have we done? We've hit it. It hasn't exploded out. It was on a small intraday bottom section here of the curve that we talked about going long. It's at the very, very bottom of the middle area here on the larger time frames. So it's kind of one of those things. Is it in an area where it's kind of set up? Yeah, it is. It is. Is it a huge opportunity? Not really. I mean, we're only talking about, I don't know. I mean, there's some, I don't know. Can't say that it's horrible, right? Let me get the right piece on there. It's 4 hour right there. It needs to go through, when I'm looking at a trade setup, this is what the position looks like as far as, using that 4 hour as kind of a launch point. Okay. It's been kind of grinding through here, but when I look to the left, and this is my 1 to 3 risk to reward profit target. For those of you who don't know me, when I am setting up a trade, not only am I looking at the risk, but I'm also looking at, does it have enough room to run to hit the opposing side? Right? When I say the opposing side, for me, my personal rule is it needs to hit at least a 1 to 3, risking 1 to make 3. Right? For it to travel up here, what does it have to go through? Is it going to run into other areas of sellers? And when I look at this, yeah, it goes from low to high, which I like that. But we've had a nice little pop here. So again, you can see already what stifled the last push? These sellers. This base, this pop, and again, test here, and then boom again. So I got to clear that to go high. I got to clear this to go high. I got to clear this to go high, and I got to kind of clear that to get to there. So is it an area where I'm necessarily willing to go long? Not so much. I mean, I would say, yeah, I do think it will eventually get up that way. I do think it will fall once Brexit is in. Is it tradable for me right now? Not really. I think there's better opportunity out there in other markets. But I'm using this as a gauge to determine whether or not I should be trading the euro dollar or the pound dollar, using this to figure out which one is stronger and weaker right now. Now, speaking of the euro dollar, let's go over here. As you can see, the euro had kind of a little bit of a cliff, right? You guys know what these are called. This is called a parabolic retracement. It's a video that I've done for Nadex a few different times now. A huge emotional move within a small time period based off of news that gets retraced. And it did. It came down, it tagged an area where buyers had stepped in here, here, and here. Again, you can see this lower level. It actually grabbed a very, very small one, but makes sense, right? 1, 2, 3, and magic number 4. And the little one is what held. But this is something that I mentioned in yesterday's discussion. You have to understand the products that you are using. Had you been using a knockout in this case and had been trying to get in at approximately 1820, you may have gotten stopped out because, again, we had a whip down. And again, that is a risk of using a knockout bracket. But had you been using a call spread for this, okay, a call spread does not have that knockout function. If this was close to the floor of a call spread and say it got negative on you 20 pips, it did not take you out of the trade. And now currently you'd be up, approximately 60 to 70 pips at its peak, about 75 pips from that initial entry over here at 1820. So it's important to understand the product you're using, the pros and cons of it, okay? But again, we've seen buyers step in. We've seen it going into the bottom of the curve where we're expecting to punch higher. It moved in the direction that we thought, right? So right now, again, we are looking for we want to know the other side, right? I still think 1970 is a decent area. Price hasn't gotten up there. I do think we will have a little bit of a hiccup right where this last kind of crash occurred, which is approximately around 1900. again, psychological level. You see those double zeros, and it says 1902 here, but the level actually starts just a little bit below, probably right there's the top. Yeah, so you can see at 19. So be cautious with it. If it pushes up into that level, again, I do see this one rolling over. I'd be willing to look at this one at the European Open tomorrow to see if we can get another bit of bad European news and another response back to the downside. Okay. Looking at dollar CAD. So dollar CAD, it's been consolidating. This is a 4-hour chart. And you can see, I mean, it's decent. I mean, top to bottom, we're talking about 50, 60 pips, but, the highs are getting lower. The lows were getting higher until this pop out, kind of a fake, and then brought us right back in. We're still kind of in the middle of the range. For me, channel-wise, I mean, I'm kind of using this curve here based off the 3177 and the 2880 is kind of my drawing for where I'm going long and short from. I do like this zone here. I think this 131.40, the indicator loved it as well. I do think that this is a nice little level. I like how it went up. I like the formation of the candle here. I like the body to, the percentage of body to the actual wick here, and I love the response out. So I'm kind of looking, if we can get up there, I'd be willing to take this one short. As far as longs go, there's not a whole lot down here that I'm screaming on the 4-hour. I'm like, yeah, that's good. I like that, right? I think I'm going to need to wait until we get back down to this level. So we got a bit of room to run on this one. It's going to take about 125 pips to the downside. This one has a daily ATR of about 81. So this is probably more of a, I don't know, maybe turkey day, maybe dollar weakness, CAD weakness, low volume or something, push down. But right now, I'm just not as interested in the dollar CAD. You can see even here, I mean, just, boom, 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 hit, boom, 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 and it's just sideways. And again, it's a fake out, right? Oh, if we break these 4 hits of the trend line, go short. You're like, yeah, I know what I was doing. And then bam, stopped out. You're like, oh, no, it broke the top side. I'm going to go long. And then it went the other way and stopped you out again. It's just messing with people right now. It's not really giving us any type of clear trend either way. And if it's not trending, it's just better to stay away. Okay. Now, dollar Swiss has been the fake out artist, right? We had the big parabolic move. We had the watching the paint dry time, right? This is what's called watching paint dry. And then I'm like, yeah, it's finally going to retrace. Let's see if we can get short this position and kind of take a crash from this middle to low. And then all it did was came back up and we're in the exact same spot. Like this is the watching the paint dry zone, and we're sitting in the watching the paint dry zone. So dollar Swiss, again, this is a pair that relies upon uncertainty, chaos, military interventions. We're not quite there. There's not a whole lot of that going on right now, so we're not seeing a lot of movement in this one. So it's one of those ones. I know some people will trade these, week-long positions. Not a lot there. The first thing I'm looking is really clean break of this 90.76. Besides that, you can see that it's just been it's been a bit rough. We started you guys can see. Let's see what the 22nd. 22nd is right here. So we opened here, and 2 days later we are sitting here. A total of 16 pips difference in 2 days. So not the most exciting. And then again, back to where we were last week, we're in the same spot. So again, we need to find assets that are moving. Dollar Swiss is not currently one of them. Now, dollar yen has given us a bit more movement. Now, unfortunately, with the dollar yen, on the 30-minute, we are kind of sitting in the middle. Again, we had lows down here. We were able to take this nice news-based move off this 103.76. It took a while. And it went high. But unfortunately, right now, there's not a lot in this one either. On an hourly basis, you can see we got a little hiccup here, but not really much clean until we get back up in this higher area. I would say looking at this one on this kind of lower time frame here, looking at this one, I don't mind the way that this one topped. I'd like for it to push down a little bit lower. Currently, it's basing off this, but for me here, I do think that this one will kind of roll over. I'm kind of looking for, again, I don't know if this is where it's going to bounce or it's going to go just higher, but I'm looking for something along those lines. I think we will test the 103.72 later this week. Again, any bad news about COVID will all, start rolling this one back to the downside as well. But again, the ATR on this one is currently at 76, and we haven't eaten this gigantic 255th day yet. Once that's gone, once it's gone, I think we will see a bit more movement. We already did NQ. Let's talk about gold. So gold is basically free falling, right? Earlier this morning, one thing that I mentioned in gold, and again, I'll put this over here. We've had this Harry Potter, this kind of short that if we could break this, 1847. Look for a base and then a pullback. We got the base. We didn't get the pullback, but ended up punching all the way through, going lower. Here's what I mentioned earlier, that we are going to find an area where buyers step in. right? And we mentioned 1797 was kind of the area that we were looking for. That was coming off of, what was a 4-hour zone? Yeah, there is the 4-hour zone. Here's the 4-hour zone right here. So we got pretty close to it. And again, we're starting to run out of steam now. A lot of people may say, well, why is gold going down? I don't understand, right? Well, a couple different factors. I had it earlier today. I'll drag it in real quick again for you guys. I'll pull it up. And I think it's important for everybody to understand this. We are actually working, when I say we, Todd and I are actually in discussions. We are working on another kind of education summit. And I'm going to be doing a talk on market psychology. And the reason why, I just feel it's one of those things that people always need more. You can never have enough, never understand enough about market psychology. It's more about the psychology than anything else. Here's an article that I wanted to bring up that came out this morning, right? Came out this morning, but more than 125 economists are urging Congress, they're urging them to send a second round of $1,200 stimulus checks out, basically what we had this spring. And again, couples can receive up to $2,400 plus an additional $500 for each child under the age of 16, okay? 127 of them. These are guys that this is their specialty, okay? Well, if that's the case, why is gold going down? Well, it's very simply this. When you want to buy something, do you want to buy it when it's on sale, or do you want to buy it when it's at its most expensive point? And the answer is, I'm just going to answer it for you. You buy it when it's on sale. Knowing that people are starting to put the screws in, saying we need stimulus, you're shutting everything down, businesses are going to fall, the United States is in chaos, send us money, right? The second we talk about printing money or sending stimulus checks, the first thing that's going to happen is all the inflation hawks are going to go crazy. They're going to go wild. I mentioned this morning about finding a bottom. Well, since this morning, what have we done? We've kind of chopped back and forth. And right now, if we start to go green again, what did that do? That put in a lower high. I'm sorry, a higher low, right? We still have the lower highs, although right here it got pretty close. But if this starts to go green, this pullback will now give us that higher low. Okay, now you tend to need two of those. You tend to need to have two lower lows to confirm a reversal or an uptrend. One of them might be starting to form now. If Congress or the president-elect, now that he's certified, think about this. Would he gain a lot of ground, or would Congress gain a lot of ground right now by saying, hey, listen, it's the day before Thanksgiving. We have written a bill to put in front of Congress right after Thanksgiving to get everybody $1,200, and again, the whole stimulus check. That would go a long way. And again, like I said, inflation hawks will jump all over this. So I think that what gold is doing is gold is putting itself in a position to find a bottom, to find where those last group of buyers are as a takeoff point. Okay, I think they're looking for a takeoff point. And again, on a 4-hour basis, you can see we have some levels here. On a daily basis, you can see that the last time the price was in this level, what happened, right? I'll move this so you guys can see it. The last time the price was here, we rallied, we based, and what happened? Boom. Off to the races. And that's where we got all the way up into like the 20, what are we up here at? The 2076 range. Now, am I saying it's going to go all the way up? Could. I don't know. I don't have a crystal ball. But what I am saying is the last time that price was in this area, price moved. President-elect coming in, more people closing down, Thanksgiving, holiday season, giving, because I'll tell you right now, giving us $1,200 in May or June is not going to go as far as giving us $1,200 at the season of giving. Okay? Talk about an economic stimulus. Give it to people when they're buying presents for everybody else. And then again, it supports big business, it supports Wall Street, it supports everybody else out there, right? And again, stimulus check, gold up. Silver, kind of the same thinking, right? Silver, right? Here's silver on the 4-hour. Now, it's been ugly this week. It's been down. And again, we've talked about having some buyers down in this level here around 22.77. We've gotten close. And again, we had an area at 23. It did take a bit of a bounce off of that one before punching lower. And silver is guilty of the same thing. I mean, silver is literally just following, it's just following gold. But again, we had that prior level. We did take a bounce, got to about 1 to 1. And again, you can see that here was the level of sellers, right? Right there. We punched up, we based sideways, and boom, punched, and that's exactly what offered this next one. So kind of the same thing. This is actually more of a bullish look. You can see this. We have ascending candles here. We have a wick here, another wick here, another wick here, and another wick here, all pushing in the upward direction. This also looks like it wants to reverse and push higher. Could it do that from today into tomorrow? Sure, absolutely. And then all of a sudden, again, the economic news kicks in tomorrow morning. I'll tell you right now, we get a big unemployment number tomorrow morning, right? We had this big unemployment number right here, right? It's 732,000. If this comes in at 800,000 and unemployment is going up, are they going to be more motivated to put in a stimulus check? And the answer is yes, they have to. They don't have any other option, right? So again, another reason why I think that gold is probably pushing down just to turn and go higher, all right? Now, last but not least, let's talk about our favorite friend, the black gold, right, oil. Look what oil has been doing. Now, we've had a couple different levels here, so I'm going to go back up and on a daily basis, you can see that this is what the daily candle looks like, right? We've had all these levels in here, and it keeps turning around, punching, and it did it again, and a little turnaround. We had a little turnaround point here at 43, but today has been an absolute monster going from what? 42.80 all the way up to $45. What is driving this if people are not actually driving, right? It's kind of the same story. The market is kind of preparing itself. Let's jack price as high as we can to talk about all the demand that didn't happen because people didn't travel, okay? I mean, Texas can mess with these numbers, but right now this is an absolutely huge move. I don't know if you guys can see this. I mean, how many days can you say that oil is up 5.04%? That's huge, okay? Now, normally the Wednesday before Thanksgiving, would you expect to see that? The biggest, the highest travel day of the year, would you expect oil to go higher? Yeah, probably. So if people are not traveling and Thanksgiving is canceled in some states, what the heck is this doing? Well, I'll tell you right now, it's going higher, and what it's preparing for is a big short, okay? I like these levels. I had this on the daily right now. I think I found this on the 2-hour. When we go back and look at this one, you guys can see right, where is it? It's a while back. Right there, okay? We had a very interesting kind of not only bounce, right? Price came down. It bounced off this level, drove through it, and then again, stabilized, and then collapsed. So it's a level that we've seen in the past. It's kind of a hidden level. It's not up at the top. It's not a peak. The next one of those peaks is a bit higher, right? But it is a level that I'm kind of looking at right now saying, I wonder if we can get some stabilization in here. Will this be the next short? Or will it grind its way higher over the Thanksgiving holiday, and will we start flirting with this kind of upper kind of pullback as well as retest? And actually, in actuality, I guess I got to put it there. That's a better place to put it on the 2-hour, because you can see we had the base, the pullback, and then boom, front run, touched, and dropped. So it's showing us that there are kind of buyers. I mean, really ideally there, but I'm going to be a little bit more conservative, or a little bit more conservative in the draw and put it there. All right. So now you guys know where those levels came from. Let's go all the way across and see what we are dealing with now. And you can see, what do we have on really in the last 2 hours since the open today. This is a parabolic move. Parabolic moves are typically looking for an area of opposing sellers or buyers. Again, is this the top? I don't know, but as soon as we get confirmation, this could be an interesting place to kind of roll over and take a short, right? We are seeing some stabilization, right? It popped, it kind of pushed up, popped again as in stabilizing. We start to push down, and all of a sudden we can draw a box like this. Again, that could be the potential. We know we have sellers right here, right? And again, we got front right here. So again, if we push down, this could give us one of those kind of Harry Potter moves, and we can maybe do something along these lines, right? And again, that's one of the things I love about Nadex. Again, we're able to keep our risk low based off of where this is, and again, matches the correct product. Tomorrow morning there should be some movement. I mean, if you're looking to get into them now, I mean, we can see what the stabilization looks like. You can take a binary into tomorrow morning. There's call spreads. There's knockouts in here. I don't have the knockout list up on right now, but I will go ahead and pull it up while I'm talking. But it gives us an opportunity to take some limited risk. Now, could it do another 5% tomorrow? It could, but I have no idea what would justify that type of move. But again, trade what you see. The last time sellers were up here, or last time the price was up here, sellers kind of slammed this thing to the downside. I'm looking real quick at what the knockouts are that's gold. I'm like, wait a second, those numbers don't match. So it looks like 46, 47, 48, and 49. So it looks like, we're not quite there. I mean, there's a 45 coming in here rather soon, but it looks like the first knockout's a bit higher. So we kind of do want this to go up in base a little bit more to kind of lower our risk. But again, just one of those examples of different ways we can play this one, right? approaching a higher time frame zone basing here if we get a pullback. And again, kind of like the, let's see, can I do it? I just want to draw like a regular, just want to draw, I don't know, if we have one of these things, right? I don't know how to rotate it. There we go. Something along these lines. I mean, if we push this to the downside, right, and then we push back up and go here, right? If we do this to here, what are we looking for? We're looking for a pushback to the downside. One of these that would go like that, right? So that's potentially what I'm looking for in this one. Like I said, it has such a big, strong movement up today. 5% is absolutely huge in oil. A lot of times look for a base, look for a little bit of a pullback. If it cannot push higher, that would be your risk level and your chance to take this much lower. And again, I would say I'd have targets around 43.60 is probably what I'm looking at, about $1.30 to the downside. Again, in preparation for a holiday weekend. So with that said, guys, there's a lot in there. Like I said, it's always a strange week. Again, Thanksgiving, lower volume. The moves are a lot more violent. You know, again, it doesn't take as much money to kind of manipulate and move the markets around. So just be cautious of that. With that said, I hope everybody has an absolutely amazing Thanksgiving. I hope you guys are staying safe, enjoying time with, again, close family. If you guys, you know, be cautious no matter where you guys go. But I will see you guys next Tuesday, December 1st at 12 p.m. Eastern Standard Time. Can't believe I'm saying that. If you have any questions, again, this is the easiest way to reach me. You can go to the website. I do broadcast at 9:30 in the mornings, typically on Twitch. If you want to see live analysis every day. And as well, if you have any questions for anything I said today, you're more than welcome to email me at support@keeptradingsimple.com. With that said, I'm out of here. You guys have a great Thanksgiving, and I'll see you guys next week. Take care.